Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It's Tuesday morning, April 13th, 2021. Thank you so much for joining me today. I really appreciate it. Just a quick state of how the stock market's trading right now. We're kind of grinding higher. Breakouts are failing for the most part. Pullbacks are working for the most part. If you're an active trader right now, you really need to be patient. You need to be patient to wait for the right price. And that doesn't matter if you're swing trading or if you're day trading. We're getting some very specific pockets of opportunity where we were discussing it yesterday in our community that it seems like money goes from one stock and then the next hour it literally shifts to another industry group, which is really pretty fascinating. And by the way, if you're day trading right now, it seems like, and this is based on the last 3 to 5 months worth of day trading, is we're getting this initial quick spike to the upside, barely taking out the previous day's high, which is a very significant level for day traders when you're reading the tape. Kind of like just barely gets past that level. Like I can go right at the top of the screen here, kind of just pits right past it, gets ripped back down, and then starting at 10:30 starts to find buyers again. It's not a trading strategy. It's just the way the market's trading right now. So how do you apply that knowledge? How do you apply that if you happen to be an active day trader right now? It really means two things. Number one is you have to be patient on the open and you have to eliminate the fear of missing out. And as soon as you see something screaming to the upside, you have to let it settle in a little bit for the reason that you need to have a risk point. The better trades that we've been having, as I said, have been these stocks that have obvious bullish order flow, have kind of floated down after an initial rocket to the upside, which has taken up most of the profit potential as a day trade for what the stock normally does. Kind of drifts a little bit lower, breaks that downtrend somewhere in the 10:30 to 11:30 window, and then starts just to drift higher or rally higher for the rest of the day. So if you're day trading right now, that's a day trading strategy that has been working. It's a question of narrowing your list, finding those stocks that have good, solid bullish order flow, and then watching them break that intraday downtrend and get back in the direction of the longer term order flow. As far as swing trades right now, there's plenty of stocks that look fantastic, but believe it or not, the biggest complaint that I'm hearing both here in YouTube and private messages and on Facebook is that right now the market keeps making new highs every day. Why aren't my stocks? It's by far the most common correspondence that I'm having with everybody. And all I can tell you is be patient, because what I just said about the market is you don't want to chase stocks. I'll give, for example, we'll take a look at Home Depot in a minute. We're obviously going to start out talking about Netflix today, which is approaching a level that we've been watching probably for about 8 months. And it has the good news on the Sony deal, which should give us the catalyst that we needed to spike through there. It's a really big deal. So anyway, the point I'm making is it can be a little frustrating to see these stocks kind of drifting higher, not pulling back, not giving you an entry, not giving you a good risk reward, but yet make new highs all the time. And then we have these other stocks that were kind of in the middle of nowhere. And Home Depot actually meets that criteria as well. We actually looked at it on our coaching call last night. By the way, if you want to join our coaching calls, click the link below the video. You get the coaching calls, you get my course, you get everything sent to your phone as well. I think you'll really like being a part of the community for 30 days. My point is that it requires right now you don't feel like you're missing out. That is the big part of what we want to get across today. So we have noticed that there is one sector-specific group right now that is getting a lot of attention. And when I say attention, that means smart money. That means deep pockets. That means day after day, week after week, we're starting to see them push to the upside. And when you see a lot of money going into one sector like that, that industry group, you start to see the money pile in. That's where trading conviction starts to come from. And it's something that a lot of traders don't know to do or just don't do. And it really comes down to you got to do your game planning. We had a good question last night in our coaching call is what's the difference between a trading strategy and a trading plan? And then we actually took it a step further, a game plan. So kind of what we're doing right now is the smallest part of a game plan or the kind of the introduction into a game plan. So the strategy is your edge. That's what you are looking for and say, if this happens, that's going to happen most of the time after that, which is what gives you the guts to put on a trade. A trading plan includes your trading strategy, but then it also has money management parameters and how you plan to review your trade. So it's a little bit more detailed, the trading plan. The game plan is when you find stocks that meet your strategy. And then when the market opens, you use your money management parameters. So it's three different parts. There's the trading strategy, the trading plan, and then the game plan, which is kind of what we're doing right now. And again, if you want to come to our game plans every day, click the link below there every day at 8:30. So we're going to get right into it. We're going to start out with, we'll jump right into Netflix first. I'll show you why I'm so excited about that. And then we'll get into some other stocks. So first, we're going to pop this up here. And then we're going to get right over into the charts. We're going to start out with Netflix. We'll talk about Starbucks in a minute. So this is really, again, you can't really tell a lot from here, but what I want to train your eye to do, which is really fun, is now look at Netflix here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. The buyers have controlled this stock where it closed above the opening price. That's clue number one. We actually saw that in Facebook about 2.5 weeks ago before the stock exploded. And I'll show you that in a second. But if you zoom out to this picture here, this is really what we're looking at since last August in Netflix. 560, 560, gets up there and fails, gets up there and fails. Didn't have the fresh new catalyst to get it through this level and catapult it into new numbers. And it looks like this deal with Sony is a pretty strong possibility. That's the juice they needed. That was the order flow they needed. That was the attention they needed. So whether you want to set a buy stop to get into your initial position at 560, whether you want to set an alert at 560 and wait for it to close above there, that's a personal preference. But 560 and those 11 consecutive closes above the open and the news on the Sony deal is the reason I'm pretty excited about Netflix right now. Shifting over into a sector that's not been in play for a while, but there's three stocks that I want to point out. First one is Citigroup. Next one is JP Morgan. Now you can see both of them haven't done anything in a while. And you're like, well, why would I care, right? Well, you would care because, again, if you're a regular viewer of the channel, you know that when stocks consolidate, they expand. These stocks have sat here for a while now, specifically Citigroup. You can see all of these, what we call melted candles, where they're opening and closing in the same spot. That consolidation kind of puts you to sleep. And then when you break out of that consolidation, you get these kind of moves. So we're consolidating, whether you call it a pennant, whether you call it a pause. I like to call it a pause, but you can see here clearly in Citigroup, we're just consolidating. Bam, we break out of that. I sound like Emeril Lagasse there for a second. Apologize for that. And you break out of it. So even though they're not moving right now, JP Morgan and Citigroup, you need to have them on your radar because this is what separates mediocre traders from profitable traders is you're on top of this before it happens. Remember, trading strategy, trading plan, game plan. You're game planning a watch list for potential trades. So you got to keep cycling back to this. The one that's interesting is Wells Fargo. Wells Fargo is actually broken out of that, and it's kind of like melting higher now. We have an alert set for a potential entry over 41, which is right where it's about to break out. Now, we promised we're going to take a look at a sector that has a lot of attention on it right now, and that's consumer cyclical. And I'm just going to rattle off some stocks. Obviously, Baba was the stock of the day that we discussed yesterday. Not only was it exciting that it had good news, which we said yesterday meant the indecision was pulled out of the market, but more importantly, it followed through. That's the big deal, and we got out of this trading range. This is a big deal. Today's lower opening doesn't mean a lot. We're still going to be watching this. We have three stages of order flow. There's stage 1, stage 2, and stage 3. Right now, Baba only has stage 1 order flow, so the position sizing is going to be a little bit lower, but it led the consumer cyclicals yesterday. So I'm just going to give you a couple of other ones. Tesla kind of flirting with the $700 level. So again, remember, we said you need to be on top of this. From your strategy into your trading plan, into your game plan, now we need to watch Tesla at 700. It's forming one of those patterns where it goes up, pulls back a little bit, goes up, pulls back a little bit less, and now we have that line in the sand of 700. WRK at a really good, clean breakout level today as well. And OSTK, we call this one Drunk Uncle in the community because it when it moves amazing. When it doesn't, it just kind of drifts around. However, we're starting to see a little bit of the tide turning here. And you can see what I mean by that. 1, 2, 3. You're starting to see clues. Now we have 3 days where the stock has closed well bid. 3 days where the stock has closed above the open. That's a big deal. We're going to start to pay attention. And again, the key thing is here, it's in that group of stocks that are performing well. Also, Starbucks. We said don't buy the breakout early last week. We said it pushed up and paused. You can see every time it breaks out, it's been pulling back. This time it didn't pull back. So what does that mean? it means that it went well bid. It went well bid and they held the bid. So instead of going up and pulling back, it went up and went sideways. Now, I still like it long. It's obviously kissing right at all-time highs. And the fact that it didn't pull back, that now has my attention. And I'm looking for a new trade in this stock over 114. I want to point out Home Depot. This is the one that I was talking about before that everybody's getting frustrated with. You can see here clearly it's gone up 30% in just 26 trading days. That is a really, really strong move. But the part I think this is a good microcosm, big word there for early in the morning, of what's going on in the big picture. The stock really hasn't given you a pullback. It really hasn't given you 2 or 3 days or, okay, we're taking a break, hop on board, you can measure risk, and then pop maybe right here in the last couple of days. But that's about it in this entire move up. So that's kind of what we're seeing in a big part of the market right now, where here's the point that I wanted to bring up about Home Depot. If we zoom out a little bit, you'd be like, oh my gosh, that's great. I can't believe I missed this, right? But here's really where you shouldn't feel that bad. Just prior to this 5-week move, Home Depot is drifting for months and then actually broke major support. Now, here's a big thing. Here's a big lesson to learn as a stock trader. When major stocks break key support like this in a bull market, buyers tend to step back in and say, no, the market's going higher, you're not going lower, and you get these kind of rallies where the early shorts kind of get the stock shoved back in their face. They cover to get out of the trade. Fresh buyers come back in, and you get these kind of 5-week moves. So that's something to snapshot. So 2 things there: snapshot that picture as a moment in time to add to what you might call your trading game plans, right? Where a strong stock bull market breaks support, buyers step back in. But more importantly, the fact that you shouldn't feel like you quote unquote missed it. It wasn't an A+ setup by any stretch of the imagination. Now, could you have started to hop on board somewhere over here? Sure. Maybe you could have said when this trend line broke, but it was kind of off to the races. So the reason we haven't really talked about it on a day in and day out basis is because the entry signals were just not perfect. Remember, every single thing that we do needs to have context, and context means risk, reward, and expectation, probability of follow through. This stock, as awesome as it was, it just didn't give us a great risk reward scenario, so we just kind of let it go. A couple other stocks that we want to make sure that we discuss today are number one was NVIDIA, which was a really good day trading stock yesterday. And you can see why. Now it's actually punched its way right up to a resistance level. More than likely, we're going to pause up here with all the amount of energy that was expended yesterday, and then we're going to see the next move. So again, trading strategy, trading plan, game plan, and then you have stuff in your watch list that you're not necessarily going to trade today. So this would be a bullish echo type trade where I'd be day trading it if it meets certain criteria today, but not looking for a new swing trade here yet. And the last couple that I want to call out are kind of old school stocks: Allstate, FedEx, and we zoom that one out a little bit so you could get some context, and UPS. All 3 will be on my radar again today. So I hope that we give you some really good ideas. Consumer cyclical are in play, and they have been in play. JP Morgan and Citigroup kind of coiling, looking for that big move. Have that in your watch list. Keep cycling back to it. Wells Fargo actually breaking out. Look, there's a lot to do. There's still a lot to do. It's been a little challenging. Anybody who tells you that the market right now making new all-time highs every day is super simple, just get long and just close your eyes. That's not the reality of active trading right now. There's plenty of opportunity, but you need to be patient, and you can't get frustrated if you have a couple of losing trades. That's a part of what we do. Even the best ideas have losing trades. We have no idea. One perfect trade, another perfect trade. This one does exactly what you thought. This one does exactly the opposite. It's our job to put the trade on, manage risk, and then add to those winners. And the real skill is learning how to hold those ideas. That's where you separate yourself from the pack, from frustrated chart readers, somebody who actually gets paid, because you have to learn how to manage the winners. So if you like this stuff, click down and click subscribe. I'd really appreciate it. Leave a comment, give us a thumbs up. And I just hope that you have an absolutely awesome day today. Have a profitable day. Click down below the video, learn about how to join our game plan meetings. You get everything in a lot more detail. We discussed the entries and a whole bunch of other stuff too. So have a great day, everybody. I'll speak to you soon.